Hello and welcome back to another video. I'm your beautiful host, Young Buffett, and today's video is a little different. We are out and traveling, so I'm not in the typical studio, but that's not going to stop us talking about CLOV and their earnings. So in today's video, we're going to take a look at what CLOV did. We're going to take a look at what people talked about. We're going to take a look at dark pool data. We're going to take a look at the max pain next week, and we're going to take a look at their earnings and see what kind of interesting information we can pull out of there. So first and foremost, if you haven't already, definitely check out Finery. We were all just in this chat talking about CLOV, watching it, talking about their earnings, what to expect, what's going to happen next, and where to go from here. But jumping into Ape Wisdom. So Ape Wisdom covers Wall Street Bets, new Wall Street Bets Elite, Wall Street Bets stocks, stock market, investing, SPACs, options, day trading, and short squeeze subreddits. Number one on that list was Tesla. Everybody is talking about Tesla and what Elon Musk is doing. He's threatening to sell his shares, 10% of his shares. So that should be very, very interesting to watch, digest. They had a very down day today, and I expect some dip buyers might come in, but I don't know if that is enough to counter a 10% downward pressure sell on Tesla. Next up, we have AMD. Pretty much every chip maker had an amazing day today. Then we have the S&P 500, which at the end of the day, if you notice, there was some sort of sell-off towards the market close and even after hours. The Fed pretty much came out and said, hey, asset prices on speculative stocks are getting super, super expensive. So they shot a fire warning. You can call it like a warning, just trigger flag, yellow flag, red flag. So it's going to be interesting to see how that further develops and how people digest that news. Then we have Smile, Direct Club, PayPal, AMC, GameStop. AMC had their earnings. I could do a video about that. If you guys are interested, let me know in the comments. They had great earnings. Then we have GameStop, Nvidia, Lucid, Prog, and then CLOV worked our way up on this list with an increase of 536% in mentions. Overall sentiment is about 67% positive. So not too crazy, not too good, not too bad. Nearby words include earnings, Smile Direct Club up, calls, AMC like, puts, buy, after, wish, moon, ER, enough, down, and gang. So overall, people are still talking about it. More and more people are talking about it. And Wall Street Bets is talking about it. We're back on this list. So we're back on their radar. And anytime we're on their radar, be on high alert, because every time they talk about a stock a lot, it ends up going up. But a lot of times it ends up coming right back down. So let's take a look at this chart. Comment volume is starting to pick up here, as indicated by this blue line. And then the stock price itself is working its way and holding a level above the 8. And later in this video, I'm going to explain to you why this is a good thing. And then over here, we have the same chart. And then over here, we have the max pain, which is what I love looking at. The max pain has not changed yet. Still for this week, it is 7.5. So let's keep an eye out on it. Let's see if that changes. Let's see if it comes to fruition. I hope not. But again, let's see if this refreshes tomorrow. So definitely tune into tomorrow's video. Hit that subscribe button if you haven't already. Let's keep an eye out on it and see if it actually comes to fruition. I don't know why that's a tongue twister, but every week for the past month or so, the max pain has come true. And again, if you don't know, the max pain is the strike price that the stock needs to be at to cause the maximum amount of damage to the people who bought calls and puts. And the market makers love to control a stock like CLOV to make it close at or just above or just below the max pain. With earnings being announced, with earnings being digested, I'm very curious to see if short sellers come in, or what their plans are going to be to bring it back down to this max pain. We have seen this max pain change midweek before as more and more people buy calls and stuff. So definitely keep an eye out for that. Something exciting to see though. Next week's max pain is 9. So we might see some breather. We might see some wiggle room here, as maybe this week might be a wash and we move forward to next week's $9 max pain. So let's see what happens there. Next, we have dark pool data. And if we come in here and we type in CLOV, and then we click on CLOV, we see that the net short volume and the net short volume in dollars is both positive. So that means there are less and less shorts, which makes complete sense to me because they might be a little bit scared to short this stock during earnings. But let's see how it all plays out. Before I dive in and I talk to you about what I got out of CLOV's earnings, let's take a look at the price and let's see what it did today. So it opened up today, had a pretty good day, worked its way down and then kind of consolidated, and it was waiting. You could tell it was waiting for something, and it was waiting for its earnings. It had a little pre-earnings pop right there and then consolidated a bit more, worked its way all the way until market close, and then they announced their earnings. It saw a pop from about $8 to $8.58 at its highest, and then worked its way all the way back down to $7.67, and then worked its way right back up to about 8-ish or so after they hopped on the call and talked about their earnings and whatnot. It consolidated and bounced around that $8 line and $8 mark. So it should be interesting to see how it all plays out. I do want to talk about this initial pop and drop. I do want to talk about how this news can get digested. And I do want to talk about why this might be a good thing. So if you guys have been following CLOV for a long time now, you've noticed that anytime there is a massive pop, it is followed by a massive drop. And the same thing happened over here. Every time there's a massive pop, it follows with a massive drop. Now, that's why I'm scared of Wall Street bets. That's why I'm scared anytime CLOV moves up too fast. And the fact that it didn't move up too fast makes me happy, because it can slowly work its way up. Because it didn't just shoot up and go crazy, that means the premiums and the shorting interest should be a lot lower. So it's going to be interesting to see how maybe market makers and people who are short on CLOV let CLOV breathe a little bit. I'm very interested to see what a gradual incline will look like on CLOV, and I hope to see that coming up because of this earnings. So first and foremost, the CEO came on. Vivek talked about significant decrease to MCR, and he talked about how their mission is to improve every life on track. They are on track for their mission. 49% of their people that they cover are minorities. They have a high-performing MA plan. They reference their white paper a lot, and we covered that in our last video from yesterday. So definitely go take a look at that video if you haven't already. But some key highlights were their revenue was $427 million. That's a 153% year-over-year increase, which is a lot. And it all points back to how this is a hyper-growth company. This is what hyper-growth looks like. So lives more than doubled year over year, and that was from direct contracting. So they are approaching getting more and more customers and more users and more engagement. We'll talk about that a little bit further down in my notes. Their GAAP MA MCR was 850 basis points increased. It was a similar increase in direct contracting. So overall, they are just attracting more and more users, which is absolutely fantastic to see. I'm not going to bore you with all these details. If you want to listen to what they said, just listen to the call. I'm just going to give you the top level highlights here. So he referenced the 3.5 star upgrade, which we all knew happened, but what I didn't realize is that they're also targeting a 4-star upgrade in 2022. That is kind of a guidance hint here. So he said, and he emphasized the fact that a 3.5-star upgrade is going to be a significant financial benefit in 2023. But if they can get that 4-star benefit, that 4-star rating, that will make 2023, 2024 even more financially beneficial. And as we all know, stocks price in future expectations. So if they start talking about 2023, 2024, 2025, and how they're going to continue to start growing, the stock price should follow. And then Andrew came on. He talked about their tools and their technology, and he talked about how they're rolling out different features to make it very easy to adopt. He talked about an increase of traction and more people signing on January 1st after open enrollment and whatnot. He also talked about increasing engagement, visits, physician interactions on their actual platform, their Clover Assistant platform. And the more and more they use that platform, the more and more it feeds into this data loop that they have. And the more analytics that they get, the better and better they can increase their everything that they offer pretty much. And they're working on single sign-on and different charts and graphs and whatnot, pretty much giving physicians everything that they need, a quality of life to increase adoption and engagement. They're also talking about they're targeting oncology, and then they're going to be expanding to other specialties. So that's cool to see that they're scaling into things. Mark, their financial guy, came in, talked about some really cool numbers. Again, emphasized the fact that they have $427 million in revenue, an increase of 153% year over year, and then 129,100 lives under CLOV management. So that was really cool. And then he talked about how COVID and seasonal trends and stuff all equal to costs, and they are eating costs. And that is exactly why we saw that drop today. And when they first popped, then people realized how much money they actually spent. And that is one of the pros and cons to investing in a hyper growth company. Their operational expenses and their R&D and their technology, it all costs money. And they're spending a lot of money. And they said they're going to continue to spend a lot of money, but hopefully make a lot of money in return. So overall, he said 2022 is going to be a strong year. They're going to be growing above market growth, the second year of direct contracting, membership to average 82,000 lives a year, accelerating more than 20%, meaningful reductions in MCR, improved risk scores as COVID gets better. Because they talked about how if you look at their filings, every company talks about their risks, like what kind of risks that the company faces. And he said that their company is going to get better and better and less risky as COVID gets better. So that is good to know. Again, emphasize the fact that they're targeting that 4-star rating. And he said something interesting. So the jump from 3-star to 3.5 star is very good, right? But the jump from 3.5 to 4 is going to be much, much more financially beneficial for them than the jump from 3 to 3.5. So that's going to be interesting to see what happens during that next star rating analysis review thing next year, I guess. I actually don't know how often they do that, but let's keep an eye out for that. And then he hinted towards profitability, and I like hearing that. And I don't know why the market didn't really react too much to this, because it might have just been a generic statement. However, I liked hearing that. He said despite COVID, they are striding towards profitability. They want to leverage their position. They want to leverage centric model. They are continuing vendor negotiations to reduce prices, and they want to leverage human-assisted customer care to make everything smoother and more automated. And then to wrap it all up, he again mentioned the white paper. So definitely check out that last video where we dove in and reviewed that white paper. Overall, super, super interesting to see how it all plays out. They had a great earnings, and I am happy that the stock did not go absolutely crazy. I like gradual growth, because the more gradual the growth is, the better it will be for this whole short problem that we are facing. And let me show you why. Because let's take a look at here. So we have, let's use something that maybe hedge funds and other institutions might actually be looking at. So, for example, if CLOV shot up to $16 a share, okay? You see how this call option right here is selling for $60, okay? If you were to buy this, you would buy this from a market maker. Now, if CLOV shot up that much, this wouldn't be up 29%. This call option would be up hundreds of percent. So that would be an extremely juicy premium. They would sell you that call, and then they would do everything in their power to keep CLOV below 16 by February 18th. And it would start this cyclical process of spike and short. So I'm happy to see a gradual increase, because the slower the stock goes up, the more consistently the stock goes up, the less and less we'll see volatility, and the less volatility that we see, the cheaper these contracts and the less beneficial it is to short a company like that. So I'm happy. Are you happy? Let me know in the comments what you think of today's earnings. Let me know if you think I missed anything. Sorry, again, I am traveling, so I don't have my typical setup. This is a weird video, but I thank you for tuning in anyways. And with that, I love you, and I'll see you in the next video.